Tax planning is a year-round process. Things like wills, lasting power of attorneys are not governed by tax year end. Tax year end fundamentally focuses on the use of allowances and reliefs, which are available only in that tax year. So if you don't use it, you'll lose it. Inheritance tax is a tax which is normally paid on death, but it can also be due on certain lifetime gifts, usually gifts into trusts like discretionary trusts. Now, inheritance tax is usually paid over a certain amount, i.e. £325,000, also known as the nil rate band or inheritance tax threshold. Individuals need to have assets in excess of this amount before they become subject to inheritance tax. There are a number of steps individuals can take to reduce the amount of inheritance tax they pay. They can do this by gifting assets. There are a number of gifting reliefs which are available to individuals to offset the impact of inheritance tax. There's a small gifts allowance of £250. There's a larger annual gift allowance of £3,000. If individuals are getting married or children are getting married, then there's the marriage gift allowance of £5,000, which each parent can give to their child. Grandparents can give £2,500 and anyone else can give £1,000. There are a number of things that you can do to help the next generation. We look at inheritance tax planning usually as like a protection. We look at it from a protective perspective in terms of placing assets in trust, etc. But you can also create estates for your children. Things like using junior ISAs, for example, is a good way of getting money out of your estate if you use income to fund the junior ISA, but also creating an asset for the child. Pensions is another good way of getting money outside of your estate, creating an estate for your child, and use of trusts and various other types of tax-efficient investments. Capital gains tax is a tax on the increase in value of assets that individuals have. So, for example, if I bought an asset for £100 and sold it for £200, my gain is £100, and I would normally pay capital gains tax on this. There is an annual exemption, which is currently £11,700, which is available to reduce gains before tax at either 10% or 20% becomes payable on that gain. In terms of other tax planning considerations, think about updating or reviewing your wills, your lasting powers of attorney. Just undertake a review of all your allowances and reliefs. Are there any assets which can be transferred to another spouse in order for them to use reliefs that they may have? But above all, take advice.